Hello and welcome to another trading day right here in Lagos, Nigeria on Business Incorporated. Here's what's coming up in the next 55 minutes. It's decision day. Nigeria's MPC concludes a two-day rate-setting meeting. Analysts expect a big hike in lending rates in the first MPC meeting of 2024. Great to have you join us. I'm Ladi Williams. And yes, as I said before, it's decision day right here. And we're going to be giving you a live coverage of the event today. Definitely, we're going to have the central bank governor, the first one in his leadership. And this is actually the 293rd meeting. And right here, we're going to be discussing the issues before the CBN and the MPC at this point. You can see live visuals there. We're seeing the room is being prepped at this time. We're going to be hearing from the central bank governor at the top of the hour, and definitely we'll be discussing the issues before this MPC and what to expect. Is it going to be another jumbo rate hike at this point, or maybe a hold? Definitely we're going to find out soon. But let's take a look at some markets now. We'll see oil prices ticked up in early Asian trade today, extending gaze for a third straight day as shipping disruption spurred supply worries. We see Brent crude futures there. It's up about 16 cents, trading at $82.70 a barrel, while WTI crude, that's on the flip side, up 0.24% at $77.77 a barrel. Both benchmarks are settled more than 1% higher. That was yesterday. Iran-aligned Houthis have continued their attacks and shipping in the Red Sea. And while Israel-Hamas wars not significantly constrained oil supply, it has increased freight rates and shipping time, leaving barrels underwater for long. So we're seeing supply disruptions at this time. Let's look at the grains market now. Chicago soybeans gained more ground today, rising almost 1%, as the market was supported by short covering and expectations of a lower output in Brazil. So we see soybeans there, $11.55 for 3/4 of a bushel. Corn, that rose to its highest in almost 2 weeks, while wheat gained, for a second straight session. We see soybeans there, 0.92% up at $11.55. Yeah, that's what we're seeing for the SV1, adding, as I said before, to its price. But definitely we're seeing a lot of movement there when it comes to the grain prices. A bushel of wheat, WV1, gained about 0.47%. So we're seeing uptick there in prices for the grain market. To other markets now, we see the price of Bitcoin that surged past $57,000 for the first time since November 2021. We see Bitcoin there. It's rallied a lot, at this time, but still a little bit away from that high we saw, the previous high of about $68,000. But it's really nearing that at this point. We got the low before, about $16,000. So we're seeing a big move there from Bitcoin, 10.82% jump there in 24 hours. Ethereum solidly staying above that $3,000 psychological level, 6.34% up. So it's the Bitcoin there taking all the altcoins up with it at this point. Cardano, that's at 62 cents, up 7.30%. XRP, not left out, but lower than the rest there, 56 cents, up 4.72%. And BNB nearing that $400 level per coin. So we're seeing bullish sentiment in the crypto market at this time. Let's get a quick check on the metals market now. Gold inched lower today as the market focus shifted to U.S. inflation data due this week, which could influence the timeline of Federal Reserve interest rate cuts. Spot gold edged 0.2% lower to $2,031 per ounce, while the U.S. gold futures that dropped about 0.3% to $2,043.10. U.S. personal consumption expenditure price index, that's the Fed's preferred measure of inflation, is due on Thursday with a 0.4% rise forecast on a monthly basis. All right, let's get a check on what's happening in London now. We have Juliana joining us from our London studio. Great to have you, Juliana, so sad news there. We saw Lord Jacob Rothschild, the financier and member of the Rothschild banking family, has died at age 87. Quite a big loss for the banking industry.
Good afternoon, Laddie. Yeah, it is a big loss for the banking industry because, of course, you know, the Rothschild family, as you said, they are a banking dynasty that goes back to, goodness me, probably the 18th century. We got news last night via a family statement that Lord Jacob Rothschild, at aged 87, had passed away. We don't know whether or not he was battling a short illness, but certainly it is going to have massive impact on the FTSE 100 investment firms because, again, you know, the Rothschilds are such a towering family when it comes to banking across the world, as to be expected on social media. The news of his death was met with, I would say, smatterings of conspiracy theorists, because, of course, anytime you mention the Rothschild family, there are always going to be conspiracy theories, particularly at this time when we've got a raging war between Israel and Hamas. The Rothschild family are known to be incredibly generous when it comes to, supporting Jewish causes. In fact, even in the tribute that the family put out about Lord Jacob yesterday evening, they spoke about the fact that he was very philanthropic and I believe annually gave at least £66 million to Jewish causes. And so because there's a lot of anti-Semitism going around at the moment, lots of that was linked with his death. He was incredibly wealthy, and most who are like him tend to live pretty opaque lives. We don't know much about him other than what is being widely reported, which is that, you know, he grew up in Berkshire, which is a county in England. He schooled in Eton, which is, of course, the most wealthiest of public schools in the world. And he was educated at Oxford University, where he studied history. Then, of course, went into the family's banking networks before he kind of tilted off to start his own investment firm. St. James's Place is one of them. I think they manage the wealth of up to the tune of £168 billion. It's one of the biggest investment firms on the UK Blue Chip Index today. So, yeah, he has passed away, 87 years of age, known as a seasoned banker, investor, and incredibly generous philanthropist. Yeah,
Rothschild family there. Quite an influential family when it comes to the banking, the global banking sector at this time. Big loss there for the industry. But talk to me, you mentioned the FTSE at this hour. How are the other markets looking in the UK?
Yeah, the FTSE's in tip-top shape, actually, surprisingly, because, of course, we know that the Chancellor of the Exchequer, Jeremy Hunt, is gearing up for the hotly anticipated spring budget, which we are going to be receiving, I believe, next week, Wednesday. This is a very important budget, of course, because it's likely to be the last fiscal announcement of this administration. We know that we are going to be heading to the polls here in the UK within the next few months. So this is really the Conservative Party's last chance to give away what they usually do, which is tax cuts. But there are suggestions that there could potentially be a tax rise. I'm sure you remember, Laddie, a couple of weeks ago, it was announced that the Prime Minister Rishi Sunak was going to be banning vapes, which are basically electronic cigarettes. So there are suggestions that perhaps in next week's budget, the Chancellor Jeremy Hunt will announce a tax hike on vaping. That has sent the shares of tobacco-related stocks lower, but hasn't moved the FTSE that much. So the all share is up at intraday by 0.05%. The FTSE 100, that's up by the same amount at 0.05%, and the FTSE 250, the domestic market, it's up by a smidgen of 0.02%. In the currencies market, the British pound is currently trading down against the US dollar by 0.03%, down 2 against the euro by 0.01%, and down against the Japanese yen and intraday by 0.18%, Laddie.
All right, Juliana, thank you so much for the update. Thank you.
Thank you.
All right, let's get a check on Europe now. See, Germany's struggle to address its shortage of millions of workers could cost the country its position as one of the world's leading economies. German ministers warn at this time. Joining us is DW correspondent Chiponda Chimbelu right there from Berlin. Great to have you, Chip. So how much of a problem is Germany's skilled labor shortage?
Thanks for having me. Well, Ladi, German Labour Minister Hubertus Heil said Germany is working against the clock to secure a skilled labour base. Speaking at a government conference on skilled labour on Monday, he warned that the skills and labour shortage could become the country's main obstacle to growth if it persists. Last year, there were more than 750,000 job vacancies. While that's lower than the record numbers seen in 2022, Germany lacks skilled workers in many areas, including digitalization, a sector which is essential for growth. Europe's biggest economy doesn't only need workers to replace baby boomers heading into retirement, it also needs workers to help it finance the country's pension system. And because solutions like raising the retirement age are largely unattractive to voters, skilled worker migration is being touted by the government as an answer.
All right, what is the government doing to address the problem?
Well, the German government has been relaxing migration rules for skilled workers. On Friday this week, March 1st, the next stage of the German Skilled Immigration Act will go into effect. The main change will be for some professions for skilled migrants who do not speak any German but have work experience. Many will no longer need to get their degrees or certificates from abroad formally approved by German authorities. Now, that's a big deal because underemployment is a major problem for migrants. In fact, more than half a million foreigners with a degree here in Germany work in jobs that don't use their skills, according to one estimate by the OECD. But getting foreign degrees and professional certificates recognized isn't the only challenge. Anti-immigration sentiment is rising in Germany, and that makes foreign workers feel less welcome. Also, Europe's biggest economy is competing with other Western countries which also face skilled worker shortages.
All right, so second trading day, what are we expecting from the markets in Europe?
Well, European stocks are expected to trade slightly lower today, Ladi. Investors are waiting for Eurozone and US inflation data. Now, that will shed more light about the future direction of the European Central Bank and the US Fed. In terms of data, here in Germany, investors will be looking at a consumer sentiment survey. And the world's largest reinsurer, Munich Re, will be reporting its earnings. On Monday, it said it did make a big announcement. Munich Re said it would significantly increase its dividend and return about 3.5 billion euros in a share buyback program to its shareholders. And so that is, of course, one stock that will be on the radar of many a trader today.
Right, we'll definitely keep tracking those. Now, thank you so much, Chiponda Chimbelu, right there in Berlin. Thank you. All right, now let's get a check on the markets and lending rates and inflation rates in most parts of the top economies in Africa at this point. Join us for this, whoever John McQuarrie join us right now. Great to have you. Decision Day.
Yeah, it's a great day, Decision Day, yes. We're keeping our fingers crossed. So while they're looking out for the inflation numbers from the United States, we're waiting for our MPC decision.
Exactly.
Yeah, and it's just a couple of, I don't think it's up to an hour anymore. It's some minutes away.
Right.
We'll know what direction. And you know, Ladi, it's important to know that the rate we're working with now is the rate that was reached even before July. The last meeting was in July.
Right.
But July's decision was a hold. So we still had a hold, I think 18.75.
Right.
So we've been running with that rate for a long time. And I think
it's time to make a change.
Time to make a change.
At this point.
Maybe that's why Mr. Adebayo in the morning was talking about 700 basis points.
Well, that's huge.
That's really huge.
That will have effects on the economy, that's for sure.
Mm-hmm. All right, anyway, let's look at the market numbers and then we'll go to those neighboring countries in Africa to see how their rates are compared to Nigeria and perhaps what they are doing. Starting with the equities market right here in Nigeria, we see that the bearish sentiment continues at the NGX. The market was down 0.25% at intraday right there. 101 lost the 102,000 level that we gained yesterday. So 101,745.69. For South Africa, it's also red 0.51% at intraday, 73,243.19. I wonder why South Africa has been struggling to get back to that 74 level, which has been like their usual, but that's their reality for now. EGX, when it talks to Egypt, Egypt is also is looking really good, 2.89% at 29,776.73, while Kenya closed yesterday deeply in the green, and they've crossed from 92 to 93.83 at the close of Monday's trade after they gained more than 1%. We move over to the Middle East and see Abu Dhabi is the only negative at intraday for the Middle East. It's down 0.06%, 9,255.458, I beg your pardon. Dubai is, however, on the green side, more than 1% at 4,267.52. Others are also green. Saudi Arabia, 0.57. Qatar, 0.46%. And from there, we move to the United States, where S&P features near flat, kind of quiet right there for the features, that is. And we see that the Dow Jones is slightly up, 0.03%. S&P 500 slightly up, also 0.08%. Kind of uncertain at this time, but we'll see before in a couple of hours when the market opens. Nasdaq is also 0.20%, that's 18,013.50. And in after hours action, Cargoros and Unity Software dropped. That's yesterday, more than 12% and 18% after offering weak guidance on financial performance to investors. On the other hand, Zoom, you contribute to this, Zoom Video and Hims and Hers surged 10%, 19%. Well, it's a new world, so we see applications and companies like Zoom doing very well. That's following their earnings that exceeded expectations. So right there, good for some companies and not so good for others. From there, we move to Asia and see how that market has closed. It traded mixed on Tuesday with Hong Kong's stocks leading declines and Japan's Nikkei 225 giving up some of the gains. Well, they gave up some gains, but they're still retaining that 39,239.52, slightly up, very close there to the edge. We see Kospi, however, couldn't hold on, so we see them in the red, 0.83% at 2,625. Hang Seng is in the green, closed in the green, 0.94%, really looking comfortable right there. Major economic data this week include China's Manufacturing Purchasing Managers Index, the U.S. Inflation, which we're expecting, and Expenditure Price Index data, which the Federal Reserve preferred inflation metric. And we know that these are drivers of other markets, Western markets right there. Shanghai is in the green, 1.29%, 3,015.48, while for Australia, it's also in the green, 0.13%. Now, let's see how those neighboring African countries are doing, looking at their inflation rate, looking at their interest rate. And we know that the latest driver for Nigeria's inflation these days has been money supply, money in circulation, deposits and credits captured in M3. So let's see how those numbers are looking for some of those. We'll start with South Africa right there. There you see their flag there. So the annual inflation rate rose to 5.3% in January 2024, and that's up from December's 5.1% compared with market forecast of 5.4%. Moving away from South African Reserve Bank's preferred 4.5%. Right there, then the next release is expected in March the 20th. That's for South Africa. So we see their interest rate, that the inflation is 5.3%. We are still at 29, double digit, and their interest rate there, 8.25. Money supply as at November was at more than 5 million rands. That's for South Africa. So if we say that money supply is a contributor to inflation, Then what about for Nigeria, if they have about 5 million? Well, we'll look at the numbers in Nigeria, see how that looks like, and see perhaps if we reduce our money supply, our M3, if that will also affect our inflation. All right, so let's go to Angola now and see that inflation rate right there, 21.99% as of January. Previously, it was at 20.01. So we see they're also in the double-digit space like Nigeria. But of course, Nigeria is heading to about 30 because we're doing 29.9 at this point. Interest rate, 18%, close to Nigeria also. Some similarities, Nigeria, 18.75. And money supply is about 15.6 million Angola kwacha at this time from January. That number was in January. That's about 15.6 for Angola. And consumer price index measures change over time and cost of fixed basket. And of course, this also brings back that question about what makes up the basket, you know, that we used to measure inflation. But let's go to Kenya now and see how what their numbers look like. So for December 31st, or rather from January, their inflation was at 6.9%. That looks more normal than what we have. Previously, it was 6.6%. So just a slight increase between December and January, from 6.6 to 6.9. Interest rate there, 13% from 12.5%. Well, we've had 18.75. I'm sure if we had MPC meetings before now, there would have been a hike in that. Their money supply standing right at about 5.3 million Kenyan shilling, 5.4 for December, but previously about 5.3 million. So money supply is actually increasing. Perhaps that's the December, because that's from December to January. You know, perhaps that is also contributing to that. Now, when we go to Ghana, our closest neighbor, we see that interest rate, well, looks very familiar right there, right? 29%, but we are still above them, 29.9%. Inflation, that's their interest rate. Our interest rate is 18.75 at this time. Their inflation looks close to us also, 23.5, while for Nigeria, it's 29.9, and they went from 23.2, so just a slight increase when you look at their inflation. We went from 28, almost 1% is what we added between December and January. So that's Ghana right there. And then we come to our own Nigeria. Well, this is our home, so we are most familiar with it. Money supply, looking at about 72 million naira. And then that's for November. And then interest rate, 18.75. And inflation, 29.9. We went from 28.9 in December up to 29.9. So these are the factors that the MPC has been considering since yesterday. The issue of money supply, the issue of inflation, interest rates, how to mop up, you know, the money that is in circulation and say if that will deal with inflation. And of course, they're also using the markets, you know, to also see. So we've had a lot of hikes when it comes to the rates in Nigeria, as you've seen there. We've been on this journey for a bit. And I remember last year, a major conversation before Mr. Cardoso took over was the effectiveness of rate hikes. I don't know if you're going to start having those conversations again with Mr. Cardoso. It's not just about hiking rate, but is it really having that impact that is expected to have? So, Ladi, I know you're going to be deep in the conversation,
right,
and I know you have your guests to do that.
Yeah.
But of course, this is one of the things that we'll be looking at while we continued hiking rates all through from those dates. We did not see a corresponding drop in inflation.
Yeah, just kept on going up.
Kept going up. So, is there something we're missing? Has Mr. Cardoso's team discovered what we're missing,
right,
you know, that will make hiking rates more effective?
Well, we've seen a lot of circulars coming from the new leadership, and definitely we see that they have been really busy.
Very busy.
And we'll be finding out what they've been really working on today when we get that decision.
Exactly.
Definitely. Thank you so much, Eni,
Yeah,
for the details there, giving us all the inflation numbers from most of our neighboring African countries and what their interest rates are saying at this time. But definitely right here We're going to be drilling down on the issues before this MPC on the 293rd meeting. And we're going to get that decision right here live on the show. And we're going to have our guests. They're going to be helping us break down, these issues and tell us what to expect. And when we get that decision, if it's the right decision and the impact to expect for the economy. We're going to be opening the MPC Decision Studios at a moment after this. Do stay with us. Welcome back. Well, it's Decision Day, as I said before, and it's a 293rd meeting, the first one for the Cardoso-led leadership at this point of the CBN. And we also have new committee members. And it's on the front burner today. It's a battle to tame inflation in Nigeria and also stabilize the FX market. We're seeing Nigeria's inflation rate for January there, 29.90%. And definitely it's an all-time, it's a new high, at this point, even though we've had, some really high inflation numbers in the previous years, way before now. But definitely, ahead there, we'll see that right there, the room is being set, at this time for the committee, and they're going to be delivering. There's a live feed right there on your screen, and you can see that we're going to be getting the decision. That should be at the top of the hour, and we're going to know what the MPC has decided. Is it everyone at this point is expecting a hike, but by how much? That is the question, at this time. Well, joining us for analysis, we have Dr. Josh Bamford, partner at Anderson, and he's also the head of Transfer Pricing Economic Advisory Services at Anderson. We also have Mr. Kalu Aja, a seasoned financial analyst, and they're going to be helping us understand the issues before this MPC and make sense of the decision right after. Thank you so much for joining us for this one. Quite an incredible time, looking at where the Naira is, because I remember a couple of years ago, that 1,000 level looked really far. Yes, but looking at where we are right now, it's not looking that impossible. So we see the issues, before this. But let's look at the global markets, at this time. We've seen in the U.S. Inflation that peaked at about 9.1% in June 2022. And now they're almost close to the target, at this time. The UK, that peaked at 11.1%. They're also getting close to the target. And there's chatter about rate cuts coming at some point in 2024. Even though we see the apex banks keep kicking that, down the line, trying to calm investor nerves, at this time. Talk to me, I'll start to you, Mr. Carlo. Talk to me about, the trend we're seeing, in the global space, with the heavyweights, and how it's impacting us in Africa at this point.
Yeah, well, inflation in the US and Europe was driven by energy, high energy prices from the Ukraine war, and also the monetary expansion post-COVID. So those elements or those scenarios are winding down. COVID has wound down, supply chain has wound down. Ukraine war, now we can plan around it. It's still there. So the energy crisis, more or less, we can plan around what's going to happen with Russia and Ukraine. So you see inflation dropping in the UK, dropping in the US as well. The US is almost, like I said, down back to their target. So that's going away, right? But if you then come to this, to how it's affecting Nigeria, Nigeria's inflation is driven by other factors apart from energy and monetary expansion. There's food inflation. Key driver for inflation in Nigeria is food. And we haven't gotten a handle on food, local food grown in Nigeria to the cities in Nigeria. So that is still sticky in Nigeria. So even if we raise rates, the elements of which I can assuage inflation is now going to be in question. That, I think, is the difference between both. Other main issue is the US inflation drove interest rates higher, which meant you could get investment in the US risk-free, FDIC insured at about, say, $250,000 at about 4-5%. So why would you come to Africa when you could do US at 4-5% APY? So that affected also African emerging markets. So now that the rates are going to start to come down, perhaps we get a look in again, and then our bonds then become, should we say, better look. Yeah, exactly. That.
At this point,
that's what we are.
Yeah. So, Dr. Bafo, definitely, it's we're seeing a different scenario when it comes to Africa. But what do you think we can learn, from those major economies? Because we saw them raising rates. We all started raising rates at almost the same, but they led the charge. Those apex banks there. What can we learn from them?
I think my colleague has explained, the factors that led to higher inflation in the more major markets, and how using monetary policy and tools such as increasing interest rates helped in their case. In our case, there are multiplicity of factors, and he's enumerated some of them. At the top of it all is food inflation. If you look at the data right now, even though the headline inflation rate is 29.9, if you look at food inflation, it's around 35.4. If you look at core inflation, which is, if you exclude food inflation, it's somewhere around 25, 23. I'm not too sure about it, but it's lesser than 29%. So it tells you the role that food inflation is playing in terms of pushing the headline inflation up. Clearly, we know that this is a peculiar situation to Nigeria. That is the food insecurity issues, where we know it has kind of lingered for too long a time. You would think that the government will tackle this head on and deal with that. Now, apart from that, there's also the twin policies that this current government implemented when they took over in June of last year, which is removal of the subsidies and floating the exchange rate from a fixed exchange rate regime to more flexible exchange rate regime. Those two policies actually have potential adverse impact on inflation. When you look at subsidies, even when inflation went up, Nigeria's own was subsidized because, the petroleum products that were coming in were being subsidized. So it doesn't have that extreme impact on transportation costs and therefore implications for final prices for final goods and services. So that's one impact. Then you look at exchange rate. Once you've deflated it, you left the market to determine the price. There was no intervention by government, which meant that, whenever there was excess supply, excess demand over the amount of supply, it put upward pressure on the price of dollar in terms of Naira terms. And if that happens, for imported products, whether raw materials, plant and equipment, finished goods, those prices are going to be passed through to final consumers in the form of higher prices. Even when it comes to government importing petroleum products, you are now going to convert Naira, at a higher cost to get a dollar in order to import that. That also had its pass-through effect on higher prices. So those were all supply side, factors that has affected inflation. Added to that is the ways and means advances that the Central Bank of Nigeria gave to the government, which led to higher liquidity in the system. Under the current administration, there's been some open market operations, specifically in the form of open market sales, to mop up some of this excess liquidity, but that has not been enough. So really, our challenge is a bit different from that of the major markets. So we need to look at some of their lessons, the ones that are similar in our cases, and the ones that are peculiar in our case, we deal with them specifically in order to get results.
So at the end of the day, it's a different scenario when we look at those economies at Nigeria. But, bringing it back to Africa, at this point, we did see, if we look at the inflation rate there for Nigeria, Ghana, Angola, and South Africa, the major economies there, we see Nigeria for January 29.9%, Ghana 23.52%, Angola 21.99%. But I'm particular about Ghana here. The last high, that was February 2023, 52.8%. That's a big drop.
Yeah. That's my home country, by the way.
Exactly.
So, Ghana's story, there are lessons to be learned from the Ghana story in terms of Nigeria's case. Ghana faced what I call a debt crisis, all right? Ghana had a situation whereby their debt to GDP ratio consistently grew at a very fast rate during COVID and post-COVID. Credit rating agencies downgraded, Ghana's sovereign, bond ratings. And clearly, Ghana couldn't access the international capital markets because in the past, whenever they've had significant exchange rates or balance of payment issues, they've gone to the capital markets, borrowed, in dollars, euro bonds, and intervened at least in the short term to stabilize, the exchange rate so that it doesn't have pass-through effects on inflation. but that was non-existent. So with all that going on, clearly they couldn't borrow. There was, some kind of debt crisis, and there was a need for Ghana to go to the IMF, in order to come in and help stabilize, the economy. Now, after they got into the program with the IMF, they had to rein in expenditures, in terms of creating some fiscal space. So Ghana went through some tough periods, but now you are seeing some of these results, because without reining in the exchange rate, all right, imported petroleum products are in USD, so that leads to some significant pass-through effect. Ghana doesn't have the luxury of subsidizing petroleum products, because when we went to the IMF in 2015, one of the conditions was not to subsidize, right? So they don't have the ability to do that. So anytime imported petroleum products prices went up, in part due to fast depreciation of the local currency, that was passed on to final consumers, because import cost goes up and final goods and services went up. So Ghana was in a very bad situation, got to as high as 50+% January and February of last year. But they've had a steady decline for about 6 months, just until last month, And I think that there's this hope that if you look at the trend, things are going to get better. Obviously, there's going to be some base effects, because last year prices went up. So when you look at the fact that average prices went up previous year compared to this year, there will be some base effects. But by and large, you can see that things are getting under control.
Right.
What is going to be very interesting is this year's an election year. And election years are always interesting when it comes to
basically half the world is heading to the polls.
Exactly. We have a tendency of flooding more money into the system, and that can also lead to a demand side type of inflation creeping in. But because they are part of the IMF program, there's that pressure to be more disciplined in terms of fiscal spending. So hopefully they are able to bring it further down, because prior to COVID-19, Ghana went through a fabulous period from 2017 through to 2019. Inflation actually was at single digits. At some point, it went as low as 7.8%. GDP growth rate was on average 7%. But the debt situation was like that, with a little bit of a shock, things then went worry. So it tells you that if the real sector is doing well, but your financial sector, it's a bit weak, then some of these exogenous shocks can actually worsen all the gains that you've made. So we really need to correct stuff on the financial side.
And looking at the numbers there, we see from December to January, most of the top African economies, we saw an uptick, with inflation from Nigeria 28.92. Definitely that has been on the rise, in Nigeria. But Ghana went from 23.20 to 23.52. Yeah. So, Mr. Carlo, I know Ghana did cut rates. they led the pack.
It's not
too early. Was it too early?
Like you said, Ghana it was a debt problem. Foreign debt, expensive foreign debt. If you take that away from Ghana, they're perfect. Yeah. So you have to look at it in that light, that locally they were doing pretty well. Then they had this shock that they couldn't pay the foreign debt, and of course that then cascaded into loss of confidence, raising rates and all that. They defaulted, and of course their bond yields have gone out the roof. So that's what's happening. We're in a different situation totally. And when he was talking about debt, I got scared, because ways and means, we printed, if you convert it to dollars, 50 billion. If you convert what we printed to dollars, that's $50 billion. That's a debt overhang. So what happens if we can't service those debts? What happens if oil goes to $50 today? Then we're in Ghana's situation where we have maybe a booming economy, but we don't have this huge debt overhang, and most of our revenues then go to service or to pay down the principals. Remember, this year, we're going to pay principals on Eurobonds. The principal is going to come due this year. So we need about $1 billion plus just out of our normal revenues just to pay down Eurobonds. Before we talk about servicing the existing debt, we will talk about salaries, before we talk about any subsidies and all that. So watch the debt.
Watch the debt, at this point, because definitely, we've heard that phrase about the kiss of debt. You know how painful it can be. Anyway, if we go to our live feed there, we can see the MPC members there beginning to come in at this time. Definitely, they're getting seated. And we'll also be definitely new faces, when you look at the new members there. We do have a list there. We have Mr. Mohammed Abdullahi He's a deputy governor there. I'm also a member. We have Mr. Bala Bello, is a CBN deputy governor. We know there are about 4 deputy governors. We have Osoro. She's also a deputy governor. That's a Philip Ekeazo. Then we have a new face there, Mr. Lamido Yuguda, Director General of the Securities and Exchange Commission. He's also a member. We have Jafia Lydia Shehu, Permanent Secretary of the Federal Ministry of Finance. We have Murtala Sabo, the CBN Director. Aloysius Uche, that's a member. Agu Pauline, Mustafa Kiwumi, and Bamidele Amo. So definitely new faces, at this point, and we know they just got confirmed, by Senate. I'm wondering, is it enough time for them to, understand the issues at this time? What are you thinking, Mr. Kalu?
Well, this is going to be a very, very good meeting because we're going to know who are the hawks and who are the doves.
Right.
So with the minutes are going to be very, very carefully read line by line. Let's see what they said. Not just the votes, but let's see what they said, who disagreed, who agreed, who wants to go further in rate cuts or who wants to go higher in just rate hikes. So that's what's going to be very important. They are all professionals. I think they understand the impact of rate cuts to the economy, if rates should go up, the impact of the SMEs, growth and all that. They get that. It's going to be a decision to say, what do we sacrifice? Do we sacrifice the SMEs and bring down inflation? Or do we kill inflation for now and then worry about growth later, or balanced approach? That's what they have to decide. Once they decide on that big score, then of course you need to then tell you, okay, let's do the asymmetric corridor this way, let's do the CRR this way. But that big decision is what we want to see from them. Is it unanimous? Is it a dissenter? That then tells us, it gives us a reading that next meeting we know what to watch out for. Okay, it was a fixed meeting or a split decision this time, which means they're not yet agreeable as to how the direction of the CBN should be in tackling inflation in Nigeria. That's what we want to see today, yeah.
I think they just got confirmed last week.
So they are free to vote. They can vote, without, hey, is it a lie? They're not judges, they're not Supreme Court judges, right? So they can just vote according to their conscience. It's a simple thing. Inflation or growth? Do you kill demand or do you...
But at this point, it seems like all of them might be hawks at this point, with the way things are, looking at, the markets.
Yeah, but now, you can say, I want to increase rates by 2 basis points. Okay, what am I going to do to CRR? What am I going to do with the corridor? All that will then, you can be a dove on those byline assumptions, but on the key headline, I'm going to raise rates by 2-3%. Yes, it's going to be full hawk. I think we all know rates are going to go up. It's been signaled. We have to fight inflation. We have to signal to the IMF and to the investors that, listen, we have real rates in Nigeria, or near real rates, which means that the rate that you get from risk-free is going to be near inflation. That signal has got to be out there. But on the domestic side, how the CBN then runs with the bank, cash in the bank vaults, that's going to be more domestic. That's where you see more of their organic decision-making happening. But rates itself, the top-line numbers, that's going to go up because that's what they have to do now. Yeah.
Right. And Dr. Banfo, definitely it's a tough one before this MPC. And we're already seeing protests, at this time, cost of living crisis and all of that. And taking up borrowing costs, even higher. Definitely, even though there's consensus now that they're going to raise rates, we don't know by how much, but we know rates will be raised today. Yeah. Talk to me about, the decision here that has to be made.
All right, so I fully agree with my colleague, Kalu, because at the end of the day, whenever you're dealing with macroeconomic issues, usually the policies you use to resolve one issue could actually be worsening another, right? In macroeconomics, we talk about the 2 evils. The 2 evils are inflation, because it affects cost of living, and the other one has to do with standard of living, where unemployment would adversely affect your standard of living. So anytime we come up with these policies, these are the 2 things we're trying to achieve ultimately: price stability or economic growth, which would then create jobs. Unfortunately, the policies that you will use to curb inflation are anti-growth, at least in the short term, right? So you always need to pick your poison if both are in existence, all right? Clearly, I think it's obvious to most economists and policymakers that of the 2 big issues, economic growth, which affects employment, and inflation, which affects cost of living, the inflation rate is at some very high levels that seem to be unsustainable. So it has to come down. So of the 2 evils you want to address, price stability first. Now, closely related to that is the exchange rate volatility, right? And exchange rate volatility, interestingly, affects both inflation as well as growth. You understand me? If you remember, if you go back to 2016, our first recession, one of the main reasons why we had a recession had to do with, scarcity of forex, which came through significant drop in oil prices, globally. So you can see that exchange rate volatility or lack of forex, for productive ventures can actually affect the growth of the economy. At the same time, the same exchange rate volatility also affects inflation, and I've already talked about that. As long as we import stuff for raw materials, finished products, or we actually buy, we send our crude oil out and then buy our, finished products, from the international markets. We're going to be affected by exchange rate volatility unless, the Dangote refineries and other local refineries step up and we can actually transact those businesses in local Naira. Until then, we're going to have big problems, all right? So exchange rate becomes an intermediate policy that I believe has to be focused on to solve so that you can then achieve the price stability. So in my view, for now, price stability is going to be their number one priority, all right? Even though we've seen the Q4 numbers in terms of, growth rate, GDP growth rate, and, so slightly above 3%. If you look at it for the whole year, it was about 2.74, 2.72. That isn't anything to write home about because it goes in line with the population growth rate, which means that if you look at per capita growth rate, we've not had any growth at all. That is, more and more people are entering into that misery level because inflation is high, cost of living is high. Economy has not grown faster than population growth. So we're having more and more people under the poverty line. So that is another problem we need to resolve. But in the immediate term, you have to deal with inflation first, then you go to the economic growth, which means that there's a sense of urgency. So if we get it wrong and inflation continues to linger, then you're already giving up policies to help with growth in order to resolve something that you thought it was immediate. So you need to resolve it quickly so that it can go back to the economic growth. So how quickly we resolve the inflation rate issue is going to be important. And I think monetary policy is going to do its bit because they don't have full control over the issues. They're going to raise interest rates. They're going to look at other factors like the cash reserve requirement and all that. But there's a lot that has to be done on the fiscal side of things. Because whether you're going to have more agricultural products to meet local demand, it's going to be more fiscal policy. Whether gradually we're going to convert this economy to become more export-oriented and have some import substituting policies so that we don't demand as much import as we used to, so that there wouldn't be constant pressure on the Naira against the dollar, right? Then, this problem is going to continue on and on and on. So I think there's going to be a role to be played by the CBN, which is the monetary policy side, but there's also a bigger role to be played by the Minister of Finance in terms of the fiscal policy side. And it's the coherence of those two policies that will yield the desired results. Because it cannot be the case that, CBN is doing something and the fiscal policy is also moving in the other direction. The net effect will be...
I guess when you look at the body language between the CBN governor and the finance minister, there seems to be some kind of...
I think the good thing, hopefully... There's a good match. And I believe that they're going to work together to get solutions, unlike the previous administration where you could see CBN was doing almost everything.
I'm talking about stable prices. I'm beginning to forget what that feels like, at this point, because I feel like I've been used to, prices just
shooting up overnight.
Now. I don't remember what stable price, feels like at this time. But Mr. Kalu, we've had that debate, where most experts blame the central bank governors for the inflation we see right now. They said the central bank governors were printing money. We saw the printer go brrr, as some would say at this point. But there's also that argument that money printing does not necessarily lead to inflation. What do you think?
Well, if you just pick the U.S., when Obama became president, did QE1, that's quantitative easing 1, 2, maybe 3, printed trillions, and there was no inflation in the U.S. Why? Productivity rose when they printed the funds, so the money found a home to go to, and it raised productivity. So the velocity, it didn't stick around. It went somewhere, right? So you saw the dot-coms, booms. That's where the money went to. So now you have all the Magnificent Seven. That funded that growth. if you come to say Nigeria or to say Zimbabwe, and you print a lot of currency, and the currency is just sitting in the capital or sitting in the states, and it has nowhere to be spent. You can't buy a home, you can't import because it's local currency. Then, of course, that velocity is going to happen. There's no productivity gain. Then, of course, it needs you don't have that secondary school definition of too much money chasing too few goods, which then causes that inflation. So it's not the money per se, but I think it's the lack of productivity in Nigeria. The infrastructure is very, very weak. So we talk about food inflation. Food inflation is not just that we have good harvests. There's rice in Kebbi, but there's no rice in Lagos. To go from Kebbi to Lagos, you got to go through an express road populated by bandits, by some guys that are going to collect bribes from you, by bad roads. So by the time you get to Lagos, if you add the costs of that to the bag of rice, it's now more expensive. If you import a bag of rice from India or Thailand to the port of Apapa, it's cheaper than going from Kebbi to Lagos. And that's a fact. If you bring in a container from New York to Apapa, it's cheaper than, say, Sokoto to Port Harcourt. And if you don't fix that, then that inflation is homemade. You're baking inflation at home because that bag of rice is the bad roads, the bandits that keep on adding to the cost of the rice. So when the rice gets to Lagos, where the population is, it's already expensive. So when we have a rain, your bag of rice goes up. It has nothing to do with monetary policy or fiscal policy. If no Naira was printed, the bag of rice will still go up in price. And food is 51% of your consumer price index. So, of course, it takes up inflation right there.
Exactly.
So that's where we are.
Quite an interesting picture you painted there. But, you know, these are the issues, you know, at this point. And we're still going to get that decision, you know, very soon. I still have with me Dr. George Brownfield, partner head the Transfer Pricing and Economic Advisory Services at Anderson, and Mr. Kalu Aja, he's a financial analyst, and we're all breaking down this matter at this point before the MPC. But we're going to take a break now. When we come back, we're going to be looking at what next, you know, at this point, and at some point we're going to be joining the live coverage there of the MPC meeting. Do stay with us. Welcome back. Well, right there, you see the governor is seated at this time with the MPC committee. And definitely, we know it's, we're all waiting. We've all been waiting for this moment. The first one for 2024, the 293rd meeting. And yeah, we've been discussing the issues before this MPC at this point. And we're seeing high inflation rate, currency weakness, and unemployment, you know, among other issues that we have to deal with at this time. And I know that the central bank governor is going to be letting us know what went into this decision. And as Mr. Kalu did say, we're going to know who the hawks are and who the doves are, you know, right after we get the decision at this meeting. But we see right there, everybody's seated at this point, and very soon we're going to be getting a briefing by the CBN governor, Mr. Olayemi Cardoso. So the moment is here. It's almost like a match between Nigeria and Brazil or something at this point. But how are you seeing the body language of a CBN governor this time? Yeah.
They have a name for him on Twitter. I'm not sure I can see it on air.
Yeah, that name.
Yeah, I don't like that name.
But no, I think we have confirmation. The governor is addressing right now. Take a listen.
Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its first meeting of the year on the 26th and 27th of February, 2024, to decide on the appropriate course of monetary policy going forward. All 12 members of the committee attended the meeting. Decisions of the MPC. The committee decided to further tighten monetary policy as follows. 1, raise the MPR by 400 basis points to 22.75 from 18.75%. Adjust the asymmetric corridor around the MPR to plus 100 to minus 700 from plus 100 to minus 300 basis points. Raise the cash reserve ratio from 32.5% to 45%. Retain the liquidity ratio at 30%. Considerations. The committee's decisions were centered on the current inflationary and exchange rate pressures, projected inflation, and rising inflation expectations. Members were concerned about the persistent rise in the level of inflation and emphasized the committee's commitment to reverse the trend as the balance of risk leaned towards rising inflation. The committee, however, acknowledged the trade-off between the pursuit of output growth and taming inflation, but was convinced that an enduring output expansion is possible only in an environment of low and stable inflation. Members noted the decision to transit to an inflation targeting framework as essential to addressing the persistence of inflationary pressures in the economy and commended the fiscal authority for their invaluable support. In the opinion of the committee, the options available for decision was to either hold or hike the policy rate to offset the persistent inflationary pressures. Considering the option of a hold policy, the evidence revealed that previous policy rate hikes have slowed the rise in inflationary pressure, but not to a desirable extent. Members considered various scenarios of hold and hike and concluded that inflation could become more persistent in the medium term and thus pose more regulatory challenges if not effectively anchored. The balance of the argument thus leaned convincingly in favor of a significant policy rate hike to drive down inflation substantially. The MPC also deliberated extensively on various distortions in the foreign exchange market, including the activities of speculators, putting upward pressure on the exchange rate with high pass-through to inflation. Members were, however, convinced that the ongoing reforms in the foreign exchange market will yield the desired outcome in the short to medium term. Some of these reforms include the unification of the foreign exchange market, promotion of a willing buyer and willing seller market, removal of all limits on margins for IMTO remittances, introduction of a two-way quote system, and the broad reforms in the BDC segment of the market to restore stability, enhance transparency, boost supply, and promote price discovery in the Nigeria Autonomous Foreign Exchange Market, NAFEM. The committee reviewed the key financial indicators of the banking system and noted that the system remained stable. To further ensure the stability of the banking system, the MPC called on the bank to increase system buffers by recapitalizing the banks to improve resilience against potential risks. Members further enjoined the bank to strengthen surveillance and compliance regarding its earlier guidance on the application of foreign exchange revaluation gains. The committee identified non-monetary factors driving inflation, such as the persisting insecurity and infrastructural deficits, and noted the role of fiscal policy in addressing these shortfalls, while reiterating the commitment of monetary policy support. In this regard, the committee applauded fiscal policy initiatives towards reducing the cost of living for ordinary Nigerians, including the ongoing efforts to improve food supply and provide mass transit CNG buses to ease the cost of transportation, and the civil service reforms to improve the efficiency of government, amongst others. Key developments in the domestic and global economies. Headline inflation year-on-year rose to 29.90% in January 2024 from 28.92% in December 2023. Food inflation increased to 35.41% from 33.93%, while core inflation rose to 23.59% from 23.07%. The major factors driving inflationary pressure remain exchange rate pass-through, rising cost of energy, high fiscal deficits, and lingering security challenges in major food-producing areas. In addition, global factors such as tight financial conditions and trade disruptions from ongoing geopolitical tensions remain significant upside risks to the outlook for domestic inflation. Staff forecasts, therefore, indicate that inflation will remain on an upward trajectory in the near term before commencing a descent. Real GDP growth improved in fourth quarter 2023 to 3.46% compared with 2.54% in the previous quarter, driven by improvements in both the oil and non-oil sectors. The recent improvement in the oil sector was due to the combined impact of increase in crude oil production and a relatively high price in fourth quarter 2023. Forecasts indicate that the economy will grow in 2024 by 3.38%, CBN estimate, and 3.88% Federal Government of Nigeria estimate, and 3% the IMF estimate. Gross external reserves stood at $34.51 billion on February 20, 2024, compared with $32.23 billion at end of January 2024. The improvement was driven by reforms in the foreign exchange market and an increase in oil production, amongst others. In the global economy, inflation is projected to continue to moderate in 2024, but could remain above the long-term objectives of several advanced economy central banks. Consequently, policy rates amongst this group of central banks are expected to remain high in the short to medium term. The committee thus recognized the need to continue to put in place measures to boost investor confidence and to attract capital inflows. To this end, the committee will continue to monitor developments in the global and domestic economies to ensure that inflationary and exchange rate pressures moderate in the near term. The next meeting of the MPC will be held on the 25th and 26th of March 2024. Thank you for listening.
That was communique number 150 from the Monetary Policy Committee meeting, presented by the chairman of the MPC and governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso. We'll now take questions from members of the press. Please state your name, your medium, and then ask your questions. Thank you.
Good afternoon, CBN Governor. Good afternoon, everybody. My name is Sarah Chimogo. We've witnessed a rising rate of inflation, and you stated it in your speech. Would like to know what the bank will be doing to, reduce that for the sake of Nigerians out there. Thank you.
Thank you very much. Firstly, I hope you can see from the decision that has been announced with respect to our policy stance and the monetary policy rate that clearly we are out to tighten money supply and to ensure that we have a robust structure in place as far as monetary tools are concerned to rein in inflation. Obviously, we expect that this would show effects will moderate in the short to medium term. But increasingly, we also appreciate the fact that there's a structural side to inflation, which we intend to work very, very closely with other arms of government, in particular with the fiscal side. Because in my address, I had mentioned issues of insecurity. Very important that we're able to manage the insecurity challenges, and that agricultural productivity is also improved. And of course, the issues of the oil and gas challenges. So our hope is to collaborate very strongly with the fiscal side so that the other elements of inflation that are not directly within our control will be able to be managed a lot better, and a more positive outcome will come to the benefit of all Nigerians.
Thank you very much, Mr. Governor. My name is Sunday Michael Ogu. I write for Daily Trust newspaper. My question would be to some other event outside here. In some of your recent engagement, you've talked about infractions in the forex market, and there had also been reports of how some of the commercial banks have aided some of these infractions. I would like to get a sense of what you would do differently to this commercial bank to rein in on some of the unwholesome practices we have seen on that corridor. Thank you.
Well, first of all, let me say that I think it is very important, as in general, that we have a market that has a good amount of liquidity and where distortions are minimized. And by that, I mean create an environment where people can come in, people can go out as they please, and where distortions that are present are taken out so that the market functions a lot better and also is a lot more transparent. In a market like that, you find that the ability, and of course, is policed or maybe regulated by us. Let me not say police, regulated by us. And in an environment like that, you find that the opportunity for players to game the system in any way is significantly reduced. So I think it is very important that we should come to a situation where that happens in our market, where the market is able to attract liquidity and can function properly. And you will see that in recent past, we have been able to, at least through certain monetary tools, begin to attract liquidity into the system. For example, you may be aware that more recently, we attracted, and it was quoted quite widely in the press, over a short period of time, we attracted up to $2 billion as a result of the tools that we had used to calibrate interest rates, etc., and to make the market move towards greater transparency. So I think that is something that we all should expect to see as improving as time goes along. So that is that. I thought it was important to say that as background and context before I answer the question that you have just raised with respect to infractions. What we are doing at the moment is a collaboration between the central bank and the law enforcement agencies, okay, to ensure that we can understand better what is going on in the market and where infractions are taking place, they be speedily dealt with. Now, I must say that we are moving, as far as the central bank is concerned, we are moving to a very aggressive regulatory environment. We are moving to a very aggressive regulatory environment where those policies have been coming out, as you can see, and tolerance for people not to abide by the regulations that are coming out and to comply is zero. people will have to abide by those regulations, and those that do not will face the consequences for not doing so. As we look to what has happened in the past, I can assure you that a very thorough exercise is going on to identify what needs to be done. And once we come out with the outcome of those, it's not something that we will keep to ourselves. We will advise you accordingly, and we will do what we have to do. In the meantime, as I said, we are going to continue to make the market more liquid and to ensure that those who are genuine and really want to abide by the rules and regulations that have been set by the central bank will be free to do so. Those who do not should be ready to face the consequences. I won't say more than that at this stage in the game.
Good afternoon, sir. My name is James. Sir, when does the CBN hope to clear the outstanding 2.2 billion FX commitments? And if you would kindly update us on the bank's FX results. Thank you, sir.
In terms of the backlog, we are committed to clearing the backlog of identified and genuine requests that are pending. Okay, genuine requests that are forward requests that are pending. We are committed to doing that. And I can tell you that just today, we paid out another $0.4 billion to those that were so identified. We paid out $400 million that have to those that have been so identified. And we are committed to continue to do so in one form or the other to those that are genuinely identified and proven cases. It is not in our interest to hold back on paying to those who have been so identified. In terms of the reserves you spoke about, it was in my speech today that it has gone up over the recent past to $34 billion.
Good afternoon, Governor, DGs and members of the MPC. I am Nancy Naji. I want to ask a question concerning Binance. And let me put it this way, that reports have been heightened recently concerning scrutiny on Binance and other cryptocurrency platforms. Given the collaboration you have with SEC, and it's instructive to also say that I can see SEC DG here is a member of the MPC now. So I would like to know the collaborative measures between the CBN and SEC to avoid currency manipulation in the foreign exchange market, but while also nurturing innovation in that space. Thank you, Governor.
Thank you. Thank you very much, Nancy. It's a good question. And a couple of things I have to say on this. Number one, we have a responsibility to protect Nigerians. We have a responsibility to protect Nigerians. And it is with that responsibility in view that you have the central bank collaborating with other agencies of government. The collaboration with SEC is not just by virtue of the fact that the Director General of the Stock Exchange is a member of the MPC, but also the fact that they have a very important role to play with respect to the way protecting the interests of numerous investors. They have a very major role to play there. And in that regard, I am pleased to note that the collaboration we've had has been able to identify some of our fears, really, and to confirm, well, maybe not happy, but I can say that we have been able to confirm some of our fears. We are concerned that certain practices go on that indicate illicit flows going through a number of these entities, and suspicious flows at best. In the case of Binance, in the last 1 year alone, $26 billion has passed through Binance Nigeria from sources and users who we cannot adequately identify. There's a lot that is going on now as a result of collaboration between the different agencies, which includes EFCC and the police, and of course the office of the NSA. And in due course, as we progress and have more information to share, we will certainly share. But suffice to say that we are determined to do everything it takes to ensure that we take charge of our market, or put it differently, do not allow others to manipulate our markets in a way that ends up distortionary and suboptimizes for all Nigerians. We will not accept it, and we will do everything possible to prevent any of these kinds of infractions from taking place.
Good afternoon, Mr. Governor. My name is Nduka Chejin of the Nation newspaper. Last Friday, the CBN released draft regulatory and supervisory guidelines for bureau to change. Can you please tell us, or rather give us an overview of what this guideline tends to achieve when it is done? Thank you very much.
Well, firstly, I must say that in the interests of greater collaboration, the guidelines you refer to are up on our website, and it's like an exposure draft. It's not by any means final. It's an exposure draft whereby we want as many people, as many stakeholders as possible to go there and see what is on offer, and see where we are going to, and where you have questions or observations, we're very willing to accept them, fit them into the road of travel. What we are hoping to accomplish by this, frankly, is to bring some sanity to an industry that I am sure you will all agree with me has really gone out in a limb and arguably does no longer serve the interests of those who it was meant to protect or reach out to. Too many people had gone into that sector, and really, as at last count, I believe we had over 5,000 bureau decisions, going on to 6,000, which definitely had different interests depending on you know, where they saw themselves. And don't forget that at some point in time, the bureau decisions was used strictly with the intention by many who applied for these licenses to take advantage of the different windows in the foreign exchange market and in the process arbitrage the system. on an ongoing basis. Now, we are hoping that by the time this exercise is finished, by the time the guidelines come up, we've proposed that for certain categories of BDCs, which are the categories in a particular location, the share capital, minimum share capital, will be ₹500 million. And for those who choose to work throughout the country, their share capital is proposed at ₦2 billion. We are also putting strict regulations as to who should be a potential owner of a BDC. In other words, we don't expect it to be an all-comers affair. We expect it to be those who are serious and who genuinely want to provide services to Nigerians, not for themselves, but for all Nigerians. We expect the genuine ones will come out and apply. And of course, we expect to use technology. We expect to use technology for their operations. And as I had said earlier, the whole concept of surveillance and monitoring is going to be something that the central bank is going to incredibly strengthen to ensure that we're on top of those who decide that that is an area they want to face. And as I said, that facing is not for individuals or for certain groups or anything like that. We hope we'll be able to increase competition from those who are genuine and those who have wherewithal. And competition eventually should drive down prices, and Nigerians should benefit from it.
Honorable Governor, my name is Ima Uja. I work for Vanguard. There have been a series of circulars on the reform you are carrying out in the FX in recent weeks. Could you give us an overview of what you thought you have achieved in terms of the stability of the market? Thank you.
Thank you. Thank you very much. A good question. And I want to assure you, first and foremost, that these circulars were circulars that a lot of thought went into. They were not knee-jerk reaction circulars. These are circulars, the content of which had been thought of months ago, and the debates had been taking place regularly. In fact, the input for some of those circulars came as a result of certain committees, a number of different committees, many which met as early as 8 o'clock in the morning and went on for hours debating and then putting forward proffering solutions, testing certain assumptions, bringing them back, going back again to discuss and debate again, sleeping over it, looking at what had happened in other countries and the consequences of applying certain measures. Where there had been wins, where there had been losses, we took cognizance of those losses. And we bore in mind the peculiarities of our own particular situation before concluding on certain things. So a lot of effort had gone into those, and we started to roll them out as we saw the market developing. You may recall that one of the earlier ones, and a number came out at the same time, but one of the earlier ones had got to do with the open position, the net open position of the banks, and making it very clear what you could and what you could not do, so that there would be no ambiguity in how banks carried out their operations in future. And with that goes regulation. And I can assure you, with that, we had different layers of regulation going to test and to look at the books of the banks and to see where there were infractions and where people were not complying, and ensuring that the circulars were very well understood. So a number of them have come out in that spirit. And quite frankly, the hope is that with greater understanding and with very clear communication, we'll find a situation where the distortions will begin to narrow and hopefully eliminate. I would be the first one to admit that lack of clarity sometimes can lead to distortion. And that is why we feel it is so necessary to put these things down in writing. And for example, as we move along, where we may not have even anticipated certain things, and listening to the stakeholders, we come up with a circular that addresses particular problems. I know that recently we came out to try and bring greater comfort with the rate that is used for Form Ms and for customs. We had to do that in recognition of what we saw were potential, I won't necessarily call them distortions, but were making life uncomfortable for those who were using these particular products. So it's important that we as a central bank should listen, and where we see there's need for us to adjust, we adjust appropriately. But long and short of it is, I think, with the flurry of different different circulars that have come out, it has helped to douse the possible unintended consequences of other actions.
Good afternoon, Governor. Good afternoon, Mr. Governor. My name is Olayemi Cardoso for Business Day newspaper. Governor, you seem to have this very strong opinion that the Naira is currently undervalued. I mean, you've made that statement recently. So what do you think, is the fair value of the Naira, and how soon do you think, we'll get there? One. Then secondly, please, if you allow me, you've also consistently spoken about the new CBN direction, around, stepping down some of its agricultural interventions. So considering the amount of sums of money that have been injected into that sector already, how does the CBN intend to recoup, to ensure that these loans are repaid? And then how do we progress, from here?
Thank you very much. Two good questions. One, that I've said that the Naira is undervalued, and maybe some would think that that was a rather bold statement to make from a central bank governor. Look, and really from my perspective, there's a technical side, and I won't say too much on that. There's a technical side. And the central bank, obviously, on a continuous basis, does its own internal calculations. And then there's the softer side. Now, as far as I can see, the softer side is one that results in some of the things that I had mentioned earlier, okay, and that is distortion. Now, to the extent that a market is not functioning effectively and is distortionary in outcome, then my view is that it certainly cannot be what it is. And that is why I said that for me, it was a challenge to ensure that we remove those distortions. And some of the distortions we are seeing, we spoke about earlier, has been raised here, is some of the manipulation that has been taking place. That is a distortion. It's a huge distortion. And we can go on and on some of those matters and some we are investigating right now as I speak, so I will not be able to say too much on it, unfortunately. But as and when we come up with these distortions, we will take them off and throw them away, and where there are distortions that result that come about as a result of bad behavior, we will ensure that those who do it will face the music as a deterrent to ensure that others in future do not go that route. They do not, because that's very important. They take the road of travel to a place where it has no business being there, and completely confuse the market. Let me put it that way. So that is that. Then on the issue of intervention is what I think you're referring to, interventions, and the fact that the central bank has said that it is moving away from that. And I want to reiterate it. The central bank is moving away from that. It is. And quite frankly, the reason shouldn't be so far-fetched. Here we are talking, everybody concerned about inflation. Everybody is concerned about price stability. If we know that that is the concern of everybody, and if we know that it is affecting everyone, everybody is being heavily affected by this, then why won't we say that we will put everything we have to ensure that we fight that monster? Why won't we do that? The intervention has two dysfunctions as far as I am concerned from the central bank's space. One is that it takes away a lot of your time for something that really and truly you do not have the expertise to do. And two, it also, if not carefully handled, creates a lot of distortions in your economy through inflow of money supply. Through inflow of money supply. The interventions that took place in the recent past were estimated in excess of 10 trillion naira. I'm not talking about ways and means. I'm talking about the interventions that you just asked about. Over 10 trillion naira. What was the budget of the federal government of Nigeria? What was the budget of the largest state in Nigeria? Do the math, and it will tell you the extent of damage. Too much of what may appear to be good things, can do to an economy. So, for me, it's a major issue. A number of things will be naive to say that in saying we are not going to get directly involved in interventions. Those that are out there, they need to be properly monitored to ensure they come back in. That's one. What has gone out, we have to ensure that we monitor them to ensure that they come back in. And we're doing so. We're already doing that. And with various degrees of success, at some point in time, in the interest of transparency, those figures will be made public. So that has to happen. In addition to that, one is also a believer that for those who have the capacity to handle these kinds of, the relative kinds of interventions, then we can partner with them. But the time where we can have failed interventions in Nigeria is over. Is over. There's no more wiggle room to take on interventions that have a great potential to fail and do not get down to the people who they were intended to get down to in the first place. I hope that is clear.
Thank you so much, sir. I just received a question from Lagos, from Bukola Lambo of Leadership Newspapers. Sir, permit me to ask the question on his behalf. He said, Nigerians expect so much from the Central Bank of Nigeria and indeed the federal government. What is your message to the average Nigerian who believes that the CBN is responsible for all their current economic challenges? Thank you.
Oh dear. I laugh at that question, but it's not a laughing matter. It's not a laughing matter. And I think it is very important for Nigerians to understand that the central bank governor, I and my team, are not responsible for the woes that we have today. We are part of the solution. We are determined to ensure that we work hard to get out of the mess that Nigeria is in. We assumed responsibility in a time of crisis of confidence. There was a crisis of confidence. And you may all want to go to bed and wish that that crisis of confidence was not there, but it was. And we can't turn back the clock. All we can do is do the difficult things to make a bad situation better. And I do believe that the efforts that we are making are beginning to bring back confidence. Because to be frank, without confidence in our business, you are not going to get very far. No matter how much you believe you have in your store of dollars and cents, naira and kobo, no matter how much you think you have, if the confidence is not there, all that money will disappear in no time. So, we are working hard. We are putting out our policies. We're trying to avoid as much as possible not to go against the grain and the spirit of what we've said we would do. We're trying to be as open and transparent as possible. We're bearing the interests of all Nigerians in view with any decisions we are taking. We are ensuring that we put the country above individuals. Because, like I said before, and it also applies to this, Nigeria does not have the wiggle room to make failed interventions. Similarly, we do not have the wiggle room to get it wrong. We don't. We are not magicians. We can't wave a wand and it'll all be good. If we make mistakes, we'll be humble enough to say we've made a mistake and we will change course. But we will do everything possible to conduct our business, recognizing that we are in a position of trust. We are in a position of trust. and will not betray that trust. I would also say, I'm not on the fiscal side, and we're very fortunate that in the process of having the MPC, we have very senior level fiscal representation. And that hopefully should also help the handshake as we go along, because you spoke about CBN and FGN. So I will take the liberty to say something about FGN. And that is that really from the perspective of the central bank, again, we're not the federal government of Nigeria, but we see hard decisions have been taken and they are required to help us because the central bank can't do it on its own. It has to work very closely with the fiscal side. One without the other is like, that famous adage of clapping with one hand. It won't go anywhere. So the two have got to work very closely together. And we see a lot of the reforms that are being taken on the fiscal side, and are helping to create a better environment, for Nigeria. Having said all that, I think it's also important that Nigerians must also understand certain things that are basic so that, it's necessary to be able to see where the future is going. A tax to GDP ratio of 7.1, quite frankly, is one of the lowest in the whole world. It's one of the lowest. In fact, the recommendation for proper sustainable development is in the region of 30 upwards. Now, you can ask, how did we get to 7.1? Why is it 7.1 when it should be multiples of that? That is a discussion for an entirely different day, but that is what it is. So anybody having the expectations that it's all going to be turned around overnight from the fiscal side is not going to happen. But what is likely to happen is that 7-to-1 will continue to grow in an upward trajectory that will be to the benefit of Nigerians, and then get to that level where there's comfort all around. In the meantime, of course, it is for Nigerians to monitor these things, and also, from every indication, the federal government is putting in place certain palliatives that will help the difficult times that Nigerians are going through until we get to a situation where some of these things begin to improve. I thought it was important to say this, that the commitment is there, certainly from the central bank, and from what I can see, the federal government of Nigeria, the commitment is there. The difficult decisions have been taken. We're now at the stage where we're trying to rebuild and rebuild better, and rebuild in a way that those who now come will see that they have something on the ground that is sustainable. No point in building something that will crash after a number of years. That's not the idea. The idea is to put something down in place that will be able to outsurvive all of us.
Thank you so much, Mr. Governor. With that.
Yeah, there you have it. 22.75%, 400 basis points, CRR, cash reserve ratio, 45%, liquidity ratio retained at 30%, and is the first one for 2024. Hope it met your billing at this time. And I still have with me Mr. Kaluaja and Dr. Josh Bamfo. And we did hear there a lot of ground covered by the Central Bank Governor, the Monetary Policy Committee. But that number one is interventions are gone. Start with you, Mr. Kalu.
Yeah, very aggressive, very hawkish MPC we just heard. Number one, the rate has gone up to 22.75, 4 basis point increase. We expected that. They had to go up, to fight inflation, like Paul said, very, very quickly. What I think the surprise to me was the CRR, the cash reserve ratio, up 45. Did we check it? That was the highest in Nigeria's history. Did we
it was around 32.
32. So we're looking at one of the highest ever. What that means is that if you take 100 naira to the bank in Nigeria, they can only lend out 55 naira. So what the CBN is doing is restricting money supply. That's essentially it. Money supply restricted, interventions gone. That's the story for today.
Right. Dr. Banfo.
Yeah, I think we've heard a lot. First and foremost, I have to applaud the CBN governor because he seemed to really be on top of things. Some of the good news, it looks like clearly the priority is price stabilization, and that means that interest rate MPR had to go up a little bit above some people's expectation, 400 basis points. However, it shows the clear intent of dealing with inflation first before you move on to growth policies. The second bit has to do with the exchange rate stabilization challenge that we all see. It looks clearly that he is hell-bent on sticking to his paradigm shift from high interventions based on the previous government, where exchange rate was fixed for official transactions, and had the power market being floating around. But I think he's very bullish on making sure that we move to a free floating regime. My only concern I had was he looks like he wasn't going to be willing to bring in any form of intervention. Where he said intervention is done. It's something of
it's over.
Yeah, it's over. But I think at the latter part he opened some room for potential intervention. Say, hey, for those who can actually intervene, we are willing to partner with you and work on that. And I think for me that gave me a bit of comfort because no matter how you believe in a policy, you really don't know how that policy is going to actually pan out once you execute. We've seen it from June up to today. Yes, we've come up with a lot of circulars and policies, but look at the rate of depreciation. There's a belief that they can take out the distortions, especially the speculative guys. But I don't know whether they'll be successful. I'm praying they are successful. If they are, then there'll be stability and the outcome will be great.
Thank you so much for coming on, Dr. George Bampo, partner head, transfer pricing, economic advisor at Anderson, and Mr. Kalu Aja, a financial analyst. It was great having you both getting your perspectives today. So it's the first one for 2024, and there you have it, 22.75%. The central bank governor did say in March 25th to 26th, we're going to get the next meeting. Thank you so much for watching the first MPC meeting of 2024. I'm Ladi Williams. Thank you again. Goodbye.